with tails, wide range igniting. I'm looking for bounces to short, but as our short term credit spreads, if we get a setup, which is not now. See, I just picked up this pre-market gap up here, and light volume, so it's hard to tell. But and maybe the military could be extended for whatever fundamental technical reasons, but money's been plowing into the sector, particularly since the Trump election. And I was also thinking, all this positive news from Rocket Man, North Korea, that definitely has to have an effect too, right? If the threat of nuclear war with one particular country is subsiding, well, do I need as many missiles? And I know that's a broad statement, but you get the point. Gold continues to underperform. And it's interesting because I've been reading, getting different newsletters, and I always like to see if the chart supports what they're touting. And they've been touting, oh, smart money, hedge funds are plowing into gold now. And we have said, if it can break out on the monthly, let me blow this up, then yeah. Look, kind of, reverse head and shoulders kind of looking thing. Head here, left shoulder, messy right shoulder. But if it can break out of this 1, 2, 3, 4 month range, so making a new high on the year, then it has a price for it. And Greg teaches this in the Master Trader Strategies course, and we teach it here, obviously, also in real time. But this higher range consolidation above, the meat of this little pivot is eating up through transfer of supply a lot of this resistance. So therefore, if this takes out the highs, this pivot resistance, yes, it's a small focal point, but all of this has done a significant amount of negating it. So I would not wait for it to take out this high. The entry is over here, and it might be extended in that point in time because we're at the bottom of the base here on the daily. So just ideally, what would happen is it either moves up and makes a higher range consolidation that we can get in early, or it makes a new high and pulls back to minor support. That would be the game plan for us on GLD. I had this one gapping up to 1920, but it looks like it's light volume. But 1920 is gapping over this mess. And there's a price for it in 1960, so not a huge target, but a nice bullish gap. AMT, I had a little print here, but see, I don't trust these prints unless I see nice liquid data here, then I just don't trust it. But that would have been a bearish gap here. If we're gapping down to 133.70, it'd be gapping to the lower end here. FTI 32.70. So it's gapping under this consolidation pattern to this support. But you have a bullish daily, weekly and monthly. If I were long the stock, I would definitely sell a $34 covered call because this is now going to be resistance on the way back up. X-ray. Momentum has slowed. So this is where Greg talks about we don't need an oscillator. And you can also see the, well, it's not a new low divergence. Well, yeah, it is because this made a new low. You can look at the distance from the 20 MA to here. Look at the distance from here to here. Now there's no distance, even after making a new low. So momentum has slowed in X-ray. Again, I can't tell my prints. It's showing 49.33, but I don't trust it. APD, I can't tell what's there. Can't tell what's there. 143. I mean, this has been a nasty downtrend. I mean, there's a price void on the hourly. If you were to get a setup, that would be a day trade only. AGN gapping up 166.50 right into resist. Yeah, right to the top end of this resistance you see on this breakdown. But there's a price void if it can get through it. So I'm gonna set an alert, and let's just eyeball it 167.50. I'm gonna set an alert. Oh, where's my McDonald's? McDonald's was the big earnings one today. 164.60. Now this one's gapping. This is a tier 1 gap. See this? It's gapping to the top end. Let me just blow this up. Look at this. You know, this was the resistance that we were looking at on the broader market indices that were kind of at the top end of this range, whereas this one's gapping deep into all the way back here from April 5. The whole month of April, it's gapping deep into it. This is an hourly chart. Let's now drop down to a 15. Gapped up, bottoming tail, range expansion, 1, 2, 3, 4 bars of consolidation, holding the 50% midpoint of this. McDonald's looks great. I'm going to put that in a little window. CSX was a earnings pro gap from last week. And now, you know, I know it's all the way back here, you know, under this wide range bar, but let's analyze it a little bit more. Pro gap, it's not negated. Why? Because it hasn't negated the gap. It hasn't even come 50% into the gap. And here's minor support, so it's still holding above that. The weekly was a wide range breakout. Same with the monthly. See, I thought it was gapping up to 61.50, now 60.48. It's still a watch. I like this. So I'm watching CSX, both for directional and income trade. But, you know, directionals are going to be hard right now because now we're gapping up after 3 up bars, up days rather, into that ugly red bar on the spiders. That's why I'm saying, and now, okay, it's a controlled pullback here on the 15-minute chart. That's controlled, right? You don't see an ugly wide range bar down, but because of 3 bars up, gapping further into resistance, that's why I'm sticking with my plan of I would like this to, you know, go sideways for a while, give us a higher range base. All right, I think that's it on my gapping stocks. Let's look at the FANGs. Apple still lagging, earnings after the bell Tuesday. Look, this is relative weakness. Look at this. Apple is under what closed at 162. It's flat. It's flat. But it's still relative weakness to the Qs. Now it's under Friday's close. Google still struggling here. You know, this had the earnings bear gap, leaving a bear island reversal, wide range bar. I mean, the positive is the 3 days of consolidation here didn't make a new low, so this support is holding. Gapped up, coming in a little bit. If this took out the high, though, today, after this gap up and pull back, well, I take that back. Actually, it has to be over Friday's high. I was going to say we could consider a weekly put spread. Tesla, You know, you can see this big 2-bar move. Look on the weekly, what that is. That's this big green bar, which is close to being a 2-bar reversal, then a 3-week pullback, bottoming tail, 50%. So this, you know, this might be a put spread candidate, but you also have this overhead resistance. All right, it's 9:17, so Greg's ready, but Last Fang, Netflix, it's a mess. Amazon, it's neutral. That was the earnings gap Friday that, you know, we were looking at a daily call spread. All right, that's it. Right on time. I got through everything perfectly. And
all right, good job, Dan.
just looking at my Dow 30 stocks. So we mentioned Boeing, that's up $1. McDonald's is up. Disney's up. We looked at. There's not a single big negative. Nike only down 35 cents. That's it. That's the biggest negative. Wow, that's been holding up pretty well, but still a mess, but it looks higher. Looks higher in other retail. All right, while Greg is coming on, feel free to type questions, and I'll be happy to answer them in the meantime before market open.
Yeah, we still got stuff going on here. Noise in the background. Basically, everything that I've looked at here this morning, this open, while up whatever it is, it's pretty much a non-event until we see how it trades, probably for 30 minutes or so. The best looking thing is McDonald's. That's clearing resistance. I'll bring up here. It's trading at 164-ish. Well, it was a little higher, 165-ish. So it's right up near this prior high, but that's a pretty good start. But everything that I look at that I've looked at so far, that's gapping, it's pretty meaningless. Well, Sears and T-Mobile emerging, so it's interesting that they're both down, but they're heading lower. I don't know what to make of that. I see FIT is on the active list here. That's moving up at 580. That could be of some interest. And like Apple gapping up here, it's actually down, but not clearing any support. What else? Twitter is down or up, actually down a little bit, but you can see the 24-hour chart, no big deal. And it's near some support, so nothing I want to do with that. And NVIDIA is gapping up a little bit. So nothing. And pretty much. And the futures are pretty much the same. So whereas the S&Ps are gapping up a bit, they're right up into some resistance here and just starting to roll over a little bit. And here's the week before last high, the topping tail. That's what I wrote about in the letter. Here's last week's bottoming tail. And we're right in the middle between the two. There's absolutely nothing going on here. And, other than the things that we can find that might really be moving after the open here, it's going to be choppy because, you've got two reference points that are relatively close together, and any move up or down from here could just be a whipsaw. But, we'll see how it goes. NASDAQ, same thing. Week before last high, last week's low. Actually, they're starting to roll over, making a lower high. And Dow is kind of grinding up here. That's got some room to go, but it's the same situation. It's in between the two reference points. And we'll see if this week produces something of any significance. But unless it trades below this low area here, and again, these are the futures, 23.7750 or 24.750, it's meaningless. It's going nowhere. The dollar is going up, and UUP has been going up. It broke out last week out of this range here. And the dollar and gold and oil have an inverse negative correlation. It's not that tight, but that is putting some pressure, a little bit of pressure on crude oil. You can see it's down here a little bit. And gold, it's coming down to the bottom of the range. And some of those oil stocks that I've been looking at, like OYX, OXY, you may have some day trading shorts in some of these. As oil weakens, and this just spent the majority of last week just hanging up there at the high. So I'm going to knock it off here, guys, for a little. The noise here is kind of like really annoying for me, and I'm sure it is for you. But we'll try and make the best out of it. And let's see what today brings. But just keep in mind that this market, it's been choppy. Right? We've got two relatively close defined areas of support and resistance in all of these markets that they have to get beyond to do anything of any significance. And the transports had a decent week, or had the best day on Friday out of anything, where it moved up and it held on to it. But, same situation. The support and resistance reference points are relatively close. So while it was a good day, it really doesn't mean all that much. However, if for some reason, let's say oil just craters this week and the transports get above this 194 area, that's going to be a super positive. So we'll keep an eye on that and see what happens there. There'll be a lot of observing, some chopping around, and seeing which way things might take a direction here. If they do, if they stay between those two lines, I think it's probably going to be a tough week, but we take it as it comes. So, all right, we got 5 minutes here, so I'm just going to turn off my mic anyway, so we don't have to deal with this background noise.
Yeah, and I heard something on the news this morning. I should Google it unless maybe one of you know the answer, but they were talking about there's a deadline on the the tariff nonsense with China again, which could be a big market moving event tomorrow morning if whatever tariff news renewed or not renewed. And when you have known pending news events, we don't like that. We aren't gamblers. That's not our game. So we need to get that answered, before you hold too much overnight and have a gap against you. Yeah, and the Q&As, yeah, I mean, we want everybody to, to benefit, and sometimes we miss them, and sometimes, I don't know, I'm not sure that it gets posted properly. Spider still retracing here into the open on the 15-minute chart. So that, the deeper it gets, the more questionable it is. But we already predict chop. I told you my scenario to be bullish after lunch was a high range consolidation, and I don't know. We're gonna see. We'll see what happens after first 30, 60 minutes. This Intuit that I've been watching. Look at that. Had a beautiful close on the hourly on Friday. I'm going to be watching that again today. It's gapping up. Spiders here. So now you can see the gap is extremely minimal, but still, over Friday's high is still bullish. Here's the retracement in the upper left was telling you about. I got my pre-market data there. Here's this STZ. I actually was hoping it would gap down a little bit. And we have a limit for the bull put credit spreads. So they aren't going to get filled right now. We need a retracement, and we'll just watch it. And on the directional trade, we definitely said we're going to wait till it retraces to the low 232s, but just multiple time frames. I know it's extended on the hourly. We already talked about that, but daily, weekly, monthly, that's, just compare that to the spiders, or to compare it to anything. They like what's going on here, and I think it's a constellation. Yeah, they, a big alcohol conglomerate. I set an alarm on CSX that just went off to see. This could be a 30-minute high play. Now, I know there's resistance there, but it's, again, the pro gap, shallow retracement, daily, weekly, monthly. That's what interests me there. Let's check out our McDonald's. Still holding fine on the 15-minute chart. So provided, here would be the game plan. See, I don't want to, you know, I mentioned the 50% retracement into this pre-market bar. I want it for the first 30 minutes. I want it to stay above this 163.75 bottoming tail. And, you know, there's a little bit of selling coming in right now. So if it can do that and go sideways up here at these levels for 30 minutes, then this will be a fantastic pro gap 30-minute high trade. So that's a good one to watch. So our AEP is fine. The oil's fine. Costco up. Our UPS trade. Look at just grinding higher. We don't trade in the first 5 minutes, so UPS as the directional can do a 5-minute high. And it's just a swing trade. We're actually doing a bull call debit spread that expires this Friday. So I know I teach do not buy short-term options. And there's an exception to that. You can buy them all day long if you aren't paying time premium. So this spread that we recommended, we have positive time decay. So we still have a cushion. We are not paying net. We aren't paying any extrinsic value. All right, this thing's still, oh, SYK was another bullish one I had on my list here. This was an earnings one that we looked at Friday. And do you remember I canceled it after 30 minutes when we were going through the gap list again on Friday because of this ugly retracement? And I remember mentioning to you, I said, could this stock close at the high and have a bullish range expansion bottoming tail? And that's exactly what happened. And it's a breakout on the weekly monthly, so I kept it on my list. And now it's making new highs. All right, Spiders has a reversal bar right there so far on the 15-minute chart. We'll see if it can hold. Qs are a little weaker. I see Apple got a bid there. It's perking. Google, totally neutral. Now, Facebook set an alarm. Now, it's not ideal at all, but if it takes out Friday's high, it should go, you know, further into this gap area. Tesla at relative strength. Netflix totally neutral. And Amazon lagging. Look, it can't get out of its own way here. Still a pro gap, but it looks, this pattern suggests that it's going to come further into this gap area. DGX I had as a watch item, you know, negated this ugly red bar. But it's just, I mean, I'm definitely not gonna be chasing things that aren't awesome looking. Home Depot continues to do well. So that XRT half lot, and we only did a half lot. And somebody asked me, what does a half lot mean? Well, it's whatever your trading plan says that if the trade that we recommended, and for the reasons that we recommended, if it meets your world and your trading plan, and you calculate proper share size for that type of trade and your account size and the stop loss and your risk tolerance, whatever that number might be. Let's say it's 250 shares. Well, a half lot then means you're only buying 125 shares. That's all. That's simple. IWM. It's holding. Taking out Friday's high here. Well, that's not true. Sorry. Friday's high is here, but it's taking out the pre-market highs. That's what I meant. Support below with these tails, resistance above. Weekly, a total mess. Greg's Oxy still doesn't want to fall. So just set an alarm near the low. I'll just set an alarm at 77. Grub. Yeah, Grub looks like a short here. Breakdown, rally to resistance. Oh, you thought a put spread on this? Oh. Yeah, some of the gappers also I saw today, they had earnings in the next couple days. Yeah, we need a bounce, but that, in this bar right here would have been a great bear call credit spread. Look at all this resistance. You have a prior high, you have tail, 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 and then wide range that closed. Had this as a watch, Sabra, SBRA, but it has earnings this week also. Wide range bar closing out of this multi-week consolidation. A W formation on the weekly. Climactic buy setup on the monthly. But yeah, I think it has earnings the next day or two. Greg saying AEM day trade short. We have a lower high. We have a bearish gap. Bearish 15-minute chart. Okay, the market, this is a nice bar here on the 15-minute chart. I see them perking all the indices on my other screen here. VIX falling. Q's neutral. I'm not touching that. Diamond. All right, see that McDonald's did take out, it's only 941, so it took out the 10-minute high of the pre-market resistance. So it still looks good. It's just a matter of how aggressive of entry do you want. Could you have bought that 10-minute high? Yes. Stop under the pre-market low, and you share size it accordingly. Particularly on Mondays, I like just being a little more cautious, so I'm going to watch it over 30 minutes. That BMY watch, there's still a lot of selling there. I mean, it can't get off the ground. I mean, it got off the ground a little bit, but it doesn't have the oomph to continue for a partial retracement more. Yep, shop. We were looking at that on Friday. And we actually had a subscriber ask me about it. And I said, I love it for a put spread. You know, a nice bearish gap down here negated, a retest, a wide range breakout, another higher low retest. So a price void. I love this as a put spread candidate, but yeah, earnings kept me away. But Greg's totally right. It's a day trade. So the high, 128.29. Wow, I can't believe I'm just saying that number of shop. Look at this. Look at this core breakout at 40 bucks on the monthly. And now I'm saying the high 128. Wow. Look at our regional, KRE, it's the regional banks. Yep, that's doing well. KRE. But the big ones, yeah, Goldman has a wide range bar. That would be just a day trade to me. So it's a counter trend. AXP, remember, had earnings and had this pro gap. Stronger than those other ones. Well, instead of the sideways consolidation that I was talking about, you know, it came in, that's 50% gap. So this gap is still the gap in retracement on this 15-minute chart on the spiders. Look at that, held minor support and then wide range blast off bar engulfing all that pre-market data. So again, maybe a 30-minute high, and we're just going to continue to chug higher. This was an uptrend, big sideways. Well, this turned into a downtrend, but in the bigger picture, I'll just call it a big multi-day sideways consolidation. Now it's resolved. On this time frame is bullish. So the question is, where's my next target? But so far, we have bullish morning action here on the spiders. Q still dragging. Wow, Apple got some juice here. But it's earnings tomorrow after the bell, so I, definitely wouldn't be selling any options on it. We have G dot as a swing short under Friday's low. So that's actually, now that it gapped up a little bit, is perfect, because then I'm going to have more confidence of its weakness if it hits. So it's under 60.27. I'll set an alarm at 60.30. Look at that. Oh, wrong one. Constellation. Look at that beautifulness. So even though we said the hourly was extended, well, this is 15 minutes, sorry. Well, the hourly was extended. Now it's more extended. Man, oh man. So we unfortunately didn't get filled on either the directional we wanted to pull back, and the two put spreads, I gave a limit. Well, that's not true. Let me look, because I gave the limit of a lower amount. Yeah, on the weeklies, let me, I don't know if it got filled or not, because I honestly wasn't looking at it. But for the weekly options trader, we had a weekly one, and then I gave a monthly one further out of the money strikes for our advisory letter. But for the weekly, I said the 230, 225. Yeah, it's spready, so I just don't know if that would have got filled. If any of you got filled on it, please shout out. McDonald's. Let me go back to the 15 up here. See, so it did, I told you I wanted it to hold this low. As long as the market's, I mean, this looks higher, folks. It's just I'm reluctant here. Well, it's 950. We'll see what it does on a 30-minute high. And let me check some put spreads on this also. Because remember, the volatility doesn't just evaporate on earnings. And it also depends on when expiration is. So even if we're doing the weeklies, I still have 5 days left. So there's still going to be volatility there. So I look at this chart and I ask myself, what strike price would I be comfortable with holding until Friday? I mean, 160, based on this morning action, I don't think this is coming back to 160. So I would be very comfortable with the 160. The only problem is it's only 30 cents. There's not enough juice in there. The 162.5 is 65. So that would be just calling a day's low. But I wouldn't do that right now, maybe into the close. Well, remember this put spread we did last week in UNH based on a pullback? It was this bar right here. We did it over a prior day's high, pro gap breakout, and then we sat through some pain on this day, but we didn't get stopped out. And look at it, it's ripping right back to the prior highs. Our M pulling in a little bit, but that's fine. We have a we have positive time decay, and we're still up from where we entered, so that's fine. Nothing to do. Whoa, look at gold. That's a bearish breakdown gap. Wow, that does look lower. So those hedge funds, whomever, were pounding the table, buy the century, then they're able to buy it at cheaper prices right now. SLV, silver. Let's look at some sectors. Here's our XLE. It's holding. Look, wide range bar. That's impressive. Wide range bar over this 15-minute pivot from Friday. So that's still holding well. XLV coming in. Artificial intelligence hanging on by a thread there, but looks lower to me on all time frames just because of, look at this monthly chart. This was a climactic sell setup, topic tail. Then it had one more hurrah, 2-bar reversal. Then you can go down to your daily and weekly for your bearish entries. XLU utilities. Well, we played that. We had the AEP, which is coming in a little bit also. So yeah, utilities have had a nice run. And they're interest rate sensitive also. TLT here, a little bounce. Biotechs, nothing. 4 bars up in the middle of this. So they're actually lagging the broader markets. XLY, ITB doing nothing, home construction. It's just not ready, but it's trying. It's worth watching this every week. I mean, setting alarms. Had this wide range breakout, which got us into a few bullish trades, then failed again here, but it's holding this prior low. It's grinding here, consolidating on the rising 50 on the weekly. Nothing to do now, but it's a watch. Transports gapped up coming in, so they're lagging the broader markets. Schwab International Equity. XLF financials, they're just stabilized here in a big sideways range, nothing to do. China. Now, real estate. So this one looks better than that other real estate I just looked at. It's still in a sideways range. That's just a fact, Jack. But I like this wide range bar. I like this inside bar so far. I like that it's deep into this. This would be a fantastic put selling trade candidate, but I don't, just based on my history, I don't think we're going to get much juice for it. Yeah, the $30 puts for May, which are 3 weeks, and it's spready too, 10 cents by 30. There's no way I would do that. So that is a non-trade. Semiconductors stabilized, but still definitely lagging the market. I mean, new lows here, gapped up, wide range engulfing. It's just hanging, it's consolidating at the lows here from Friday. So if they don't get going, that, could be a continuous drag on the NAS. Our NVIDIA, big new, not our NVIDIA, it's just our go-to, still doing nothing. XLK is, typically looks like the NASDAQ. CBX from Friday had that earnings gap, and it looked great, but we never got a great intraday entry. I mean, here, well, see, that was over lunch, this breakout right there, which failed. See, right at 1 o'clock, had this nice breakout, and it failed. That's why we typically don't like taking new trades over the doldrums. It was a nice daily, and I just didn't get a good intraday setup. Let's look at some of these other gappers. VMC. Wow, it's off to the races here on the 15-minute chart. But would I have traded that? No, because it's in the middle of mess here. I'm actually going to delete you. Knock. Stabilized. Let me see what some others look like. LMT stabilizing at the 200, but that was that bullish earnings gap that got slammed. It's a bearish 1, 2, 3 on the weekly. If it closed here, this weekly bar is the same as a daily bar right now because we're in day 1 of the week. BA, I have my alarm in, so nothing to do. But the entry is over this bar, April 26th. So that is Thursday's high. So it's lagging with the sector again. This was a bullish gap pre-market, but remember I didn't have good volume, and now it's a big fat mess again. AMT, no interest. There's no price void. That is a big mess. FTI, we mentioned selling calls if you happen to be in this, gapping down from consolidation, but no new setup for me at all. X-ray, I said, was interesting. We mentioned the new low momentum slowing, and I like the gap down and engulfing bar, and there's a price void above. Let me check the puts and earnings. May 7 is earnings, so it would only be a swing trade if you didn't. Well, that's not true. I was going to say May 4 is this Friday, but there's no options for that. And there's no way I'm selling a put spread on this into earnings. Just another idea if it sets up. It's right at this prior high. I think we can find a lot better. APD, sideways mess, you're gone. AON, sideways mess, you're gone. ITW, it had that little gap, but it's in a downtrend on the daily weekly. Counter trend trade if you had a price void, and this is a very sloppy price void, you're gone. AGN was a bullish gap, remember pre-market, but I said it's into resistance, and I set an alarm. I think at 168 or 168, I set an alarm. Didn't hit, and now it's failing. You're gone. CSX, I'm not rushing into it. I'll just keep that in my minder, but I'm going to get it out of this computer because I have it on the other one. PEG, we were watching from Friday breakout. ON continues to look lower, bearish engulfing here. Now you have a price void. L we had as a I don't know why I had L in here. Must have been earnings. Yeah, I think it had earnings, and I thought it was gapping out of this consolidation, and it never did. But today it did. But the distance to the next resistance here is not very far. But it could be a put spread candidate. Let me see if there's any juice. And it does have weeklies. Oh, no, it doesn't. And there's no juice for the 50s anyway. So you're gone. This is how I prune my watch list. Wow. Wow, I missed, it was in here and I missed reviewing it with you this morning. But the question would have been, I'm trying not to be a Monday morning quarterback. My question would have been, yes, it's a very bearish gap, but is it too excessive? And the answer would have been, I don't know yet. I mean, let me watch what it does after 30 minutes. So now on the monthly, it's at the 200. Weekly is getting extended. Maybe a 1 hour low. You could day trade it if you found a good intraday pattern. But a Cooper Tire is not having a good day. Let's look at his brother. Goodyear Tire. Oh, this was the one, remember? This was a gap play we looked at on this bar. And I remember mentioning it as a late day breakdown. This one I like better if it trades under today's low. And why is that? Because then I would have 3 consolidation days in the bottom part of this gap breakdown on the daily weekly. So I'm setting an alarm right here. Well, I'll do it at 25:30 so I have time to get ready. All right, alarm set, but I like GT better than that CTB. Now I know we're getting into, oh no, these were, okay, shoot, I just didn't scroll high enough up this morning. Sorry about that on some of these earnings and gap plays. Dan had a bullish gap up, but into resistance, so I wouldn't have done a thing. And now it's a bearish one with bearish consolidation on the weekly. Keep this on your list for the afternoon. If this goes sideways and cannot retrace over this, so look, folks, I'm using not only retracement analysis where I don't want it to go over 50%, but I also don't want it to go back over this resistance. So here's my game plan. If it cannot get back over 25.30 and it chops around in a bearish manner until the afternoon, then under the low, this is a shorting opportunity. Amgen. Okay, so look at intraday is very whippy, but it's coming out of a base. It has a price void, not a clean one, but still has a price void. This, and I know it's bio, would be a great bull put credit spread candidate. Look at all this support. I think earnings were this morning. I'll verify that before I take it, of course. But now I'm going to see what juice we can get for Friday. Because being a bio, yeah, you know, my general rule is don't trade bios. But if I do make an exception, it has to be for more of the very liquid general ones that don't have as much of gap risk as the little ones where one product is going to make or break them. So the 170 is only 16 cents. Are you kidding me? Wow, that is nothing. You have to go out to the May. You could do the May 170, 165 for 52 cents. But I just don't want to hold a bio for 3 weeks. Wow, I'm shocked Friday doesn't, for $178 stock, have more juice than that. Yeah, AKS had earnings today, and that's steel. So I immediately looked at X, who reported Friday, as you can see. And that's a bearish 1, 2, 3 on steel, on X. This is another candidate. Even though the gap up, it makes it not as close to the low. If this can also give me 2 or 3 bars here of not bouncing, then that is a short watch because of the bearish 1, 2, 3. Spot, I just saw this one on the ticker going by today because I've never heard of it. And it's an IPO. So it gapped up, slammed down, rallied 50%, higher low, wide range. Here's a little shakeout here. Here's another breakdown that had no follow through. So that's my higher pivot low now. I have another higher pivot low, right? I have a higher pivot high. This one's higher than this one. If there's not enough data, I guess, to for the software to print my moving averages here, but I mean, there should be. There's 20 bars here. I don't know why my 20 is not showing at least, but I now have an uptrend on the daily chart, don't I? So it would have, if I had to just paint a 20 MA for you, it would look something like this. It would come down sharp, and then it would, I have a higher low, and then it would, I'm now up. So I'm gonna put spot in my new list. I mean, in my regular watch list of stock, like 30, 40 stocks that I watch. So that's the Spotify IPO. So now the entry on here is going to be a nice controlled pullback with a reversal bar. And that's our entry. And it does have options. The problem is they're very illiquid. Wow, these are massive. Let me check earnings. I mean, we could go out to the 140s, which is down here for Friday. There has to be earnings because this is unbelievably high. The 140s are 70 by 105. And let's say we get, filled at 85 cents maybe. That's massive. Yep, May 2nd. But those premiums, by definition, are telling me there's a pending news event. So even if it wasn't earnings, I would tell you, I don't care. There either is earnings or there's another news event that the option market prices are predict. Well, here, let me tell you the expected move. The expected move by these option prices, wow, is $15.34, which, is what, 9.5%. So I guess that's in line, right? But 15.5, yeah, but 140. And see, so think about this logic. The expected move up or down, $15. Let's just round it off. If you sold the 140s, that's $21 away. So statistically, it's saying that you have $6 more of cushion. And if you can get paid 85 cents a share for that and are willing to own Spotify at a cost basis of $139.15, then there's nothing wrong at all with doing that trade. But again, you have the gap risk. But if here's the chart. It's an IPO. They've never announced earnings before, so we don't have any history of that. But that's the way to look at it. McDonald's here, new high. Spider's just still a bullish 15-minute chart. It's just slowly grinding into this resistance, but it's a bullish 15-minute chart. Hey, let me see what we can get for selling a put, a spider put that expires today, 267. You can get 25 cents. And you would just be betting, that today's low is going to hold. And you have 11 to 4. You have 5 hours and 45 minutes of risk. All right, Q's acting better. Still has a little price void for a day trade. This is not a swing setup at all. But then it just depends on which one do you like better. Diamond's retracing, so spiders are stronger here. So these spiders are stronger on the 15-minute chart. But I still wouldn't do anything unless it took out the high. IWM's a mess. AGN. Once. Okay, so all right, Greg's saying look at AGN again. All right, so here's AGN. Oh, call spread. Okay. Oh, okay. All right. I was mixing this up with Amgen because I'm like, whoa, this chart isn't that. All right. So a couple things. It's a fantastic pattern for a call spread. Resistance, 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 breakdown. It tried to get his sea legs back, gap to resistance, and slammed with an engulfing bar. So here's the only problems. It's a bio. Or maybe it's not a bio per se, but I'm kind of lumping them into that. Well, is it? I don't know if it is bio. Allergan, I know they sell contact solution and this and that. That's not a bio. Greg, do you know, what does your thing say for the exact sector? But I still throw it in there of, drug manufacturer. Okay. So that's not a bio per se, but it still is in the higher risk gapping, risky. So I'm putting them on risk. The pattern is definitely there. Are you willing to hold for 10 days? And is 35 cents enough for you? You know me, I kind of like that 10% rule of the spread width, which would be 50 cents. And I even love doing that on shorter time frames, like a week, like Friday's expiration. So I don't have a good answer for you. I wouldn't do it myself, just for 35 cents for 2 weeks of risk for a drug manufacturer. That's me, but I love the pattern for a bear call spread. This STZ is coming in, so we might get filled on those put spreads. Let's look now. No, not yet. The midpoint is 37 cents, and I said, let's try to get a minimum of 50. So see there, compare STZ to AGN. If I can get 50 for this pattern, and it's a more, it's a bullish, I know one's bull and one's bear credit spread, I get that. But in terms of not having to be a bio and not having to hold it that long, yeah, the midpoint, it closed at 57 cents a share, so I set a limit of 50. But if I get a nice, confident intraday setup, which is not right now, because now I have a deep retracement on the 15, which is a topping tail on the daily, but I'll watch it. And let's say I get a confident entry and it's 49 cents. Well, then I'll send out a text that says, hey, go ahead and take 49 cents. And we also gave one for May to, let's see, 225, 215. It's 82 cents. Okay, so that one filled for May because it's 82 cents right now. So we actually got price improvement there because it's right back, to the opening price. All right, so we got filled in the longer dated one, but not the weekly. Wow, that was a quick reversal. I turned my head to look at STZ. Yeah, I haven't done one trade today myself. I mean, that McDonald's looked great, but I didn't do it. You did. You 100% said that, not only in the letter, but pre-market. I mean, the movie that I was wanting to play out was, like I said, for this to go sideways until after 2 p.m. Wow, Greg, nice call on that Costco. Let's see where our midpoint is right now. Hold on one back check. I'll answer that in a second. Oh yeah, Costco. Yeah, we made all right, Costco hit target on a bull called debit spread. You let it expire, get out for expiration. Yeah, we get out, just take your profits per the charts because we're just swing trading it. Because remember, if you let it get exercised, only if it's only if they're both in the money will both positions disappear. Otherwise, if one is in the money and one is out of the money, you will own stock over the weekend on Monday, Sunday, whenever it's assigned to you. Because why? Because that's what you bought. You bought a contract saying, I want the right to buy this stock at expiration, on or before expiration at this agreed upon strike. And it's auto exercise if it's 1 penny in the money. So, and secondly, typically brokerage fees are higher for doing an assignment like a Thinkorswim where I trade. It's like $35. And so it's just cheaper for me to close the position and pay my commissions than it is to let it get auto exercised. So that's a long answer to no. We're just swing traders. We aren't in the business of getting assigned unless we're selling a put, for example, naked, and we don't mind taking assignment. But even in that case, I typically just roll the puts out because I want to get more time decay and I don't want to own the underlying. Unless, like I said, I genuinely don't mind. All right, so that Costco made target, very nice. Wow, yeah, market's coming in hard now. I'm glad we stayed out of trouble. Now let's look at our weak ones that we were watching, right? GT, look at this weak GT. All right, so I mean, it looks great. I'm going to post this. Well, that's totally up to your broker, Dan. But the rule at Thinkorswim and also at Tastyworks, well, Tastyworks, they have their pricing set up where they don't charge you for any closing trades. At Thinkorswim, if you are closing an option at 5 cents or less, they don't charge you. And let's see what this low is, 25.21. $25.22. And wow, there's one little print here that was post-market. Or rather, I'm sorry, this was a pre-market down here because I'm only showing pre-market data, not post. So yeah, there was one print down here, 25.20 this morning. So I'm going to post this under 25.20 just as a swing short. And I'm pretty sure those were earnings last week, but I'm just going to check. Yep, April 25. I'll see if there's any call spread candidate. Now, if I'm willing to short the stock, then I should also be willing to short a fairly tight call spread, right? Because it's still price improvement. So a tight one in this case would be 25.50. Let me see if they what I can get for expiring this Friday. It's 20 by 30 cents. And then you have to ask yourself, well, what's it going to be when the stock falls another 20 cents? And midpoint is 25 cents now. You'd probably lose a nickel. So you could probably get 20 cents. So is that worth the risk? 20 cents. I think it's better just a swing trade. Let me see, JPM. Yeah, 113 would be a great strike. Yeah, when volatility is high, folks, we get paid for selling these options that expire in a couple days. When volatility is lower, then it forces us. We're like, oh man, I got to go out another week, or I got to go a little tighter strike. But as long as the reward to risk is still there, we still do it because, I mean, the majority of the time we are in low volatility environment, and the trades still work. The 113, 116, 28 cents. So it's close to my 10% rule on a $3 wide spread. But it's 11 days or 12 days versus 5. But I mean, the pattern sure suggests it. See, Greg and others, I'd rather just be more patient and wait till I get my setup in these spiders, because then we have the luxury of selling them, calls or puts, whatever, you know, or do I have a short-term top or bottom, and we can sell them for a day or two's risk instead of forcing ourselves to go out to 2 weeks. Wow, our Home Depot. Okay, I said, you know, we have a put spread on, and we sold it for 43 cents. And I put in there, remember, folks, I say sometimes just put a bid out there. And then if we get a positive movement, then we're going to get filled. And that's exactly what happened on Home Depot. I said bid a nickel to close it. So we're avoiding 2 weeks worth of additional risk. And we've made, let me do the math. We've made 88% of max gain. And I know Greg and I talked about this the other day. Like, well, hey, Dan, the odds of, you know, Home Depot going way back under here are pretty darn low. And I said, I know, but closing it at a nickel, we just move on to the next trade. Or, if we get another setup, we can, do a tighter put spread even, because it does look great. But it still is a judgment call. I mean, that pattern looks so great. So there's no right answer. Would you want to close your Home Depot put spread at a nickel to free up capital and have no gap risk and book 88% of max gain? What do you all think? I think it's a personal choice. But just to avoid gap risk, and we've only been in the trade 2 days, and you made 88% of your gain. Done. Transports gapped up, came in a little bit. I just go through some of my others here. Twitter's total mess. Splunk, nothing. Momo, nothing. Overstock. Hey, look at Overstock. What do you all think here? It's getting its sea legs back, but it's another example of, here's a bearish gap negated, big old engulfing, deep retracement, another kind of failed breakdown here, setting up a higher low from this low. My 20 MA is now curling, and I'm sitting right on a curling 20 MA. Still in a downtrend because I don't have a higher high yet. But it's I'm on the basement floor instead of trying to pick a bottom. Weekly sideways trend, opposing tails on top, tails on bottom. Monthly, buy setup, minor support, rising 20. I'm going to keep an eye on him. And I'm going to check earnings and puts. shoot, May 2nd. So maybe that explains why it's in a coma here. They're waiting for earnings. So gotta wait till Wednesday on that one. But even for a day trade, I mean, it's relative strength. The market sold off here intraday, and this is basing at the high. But it's coming into 11 o'clock. But I'll keep this on my list for the afternoon. Oh, look at that. That's what Greg mentioned. It's a day trade. Look at that. Beautiful. That's relative strength again. Look, it's busting to a new high with the market in a tizzy. Well, you know what I mean. Roku trying to get his sea legs back also, but I don't like this little bearish island reversal, but it needs to show me something more like a deep retracement than a higher low. But the 20 MA is curling. That's a good sign. UAL, nothing. Baidu had that earnings gap Friday. It's going sideways. Baba, it's a mess. XNet, Square, a mess. Philip Morris, it's now if it can close like this, then and then tomorrow take out today's high, then it would be better, because then today's bar is support. This Halliburton we're in, we have a covered call, and we sold the, I think, 53 to 52.50 or 53 call. So we're in the money now, but that negated this gap down. Wow, that's strong. The Oxy, these things are remaining strong. XOP, the ETF, weekly is back to this prior high, so nothing to do. But that's a nice bottom on the monthly. Oil. I set an alert on that GT, like 25.25. I see Facebook popping up here. Little spot we got to wait on. Intel. That was a disappointing gap and crap on earnings, but we still like it long term, so I'm keeping an eye on that. Knock, you're gone. All right, any questions? I'm not doing anything here until the afternoon at least. I've gone through sectors, the indices, adjusted trades. Nothing to do. Hey, Pat. Good question. And Greg told me to get rid of it earlier, and I said, I know, I'm trying. It just shows up on spiders because I got this. Let me mute the TV. All it is, though, is their pivot numbers. The person I got this setup from, a year or so ago, she programmed all kinds of stuff under the hood, and I don't know why you need it. So here, let me just pull up anything. All it's doing is marking pivots. What pivot is when you have